Are you tired of putting off bookkeeping? Maybe your receipts are piling up, your bank transactions are unorganized, and you have no idea how much money your business is actually making? Today, we're going to fix that. In this video, I'm going to walk you through the 7 simple bookkeeping steps that's going to help you organize your business finances and avoid having problems later. But first, what exactly is bookkeeping? Bookkeeping is the process of recording business transactions, organizing income and expenses, keeping financial documents, tracking where money is going, and making sure your records are accurate. Bookkeeping and accounting is connected, but they're not exactly the same. Accounting focuses more on reviewing and understanding financial information. Bookkeeping focuses on making sure the information is recorded correctly in the first place. Think of bookkeeping like a foundation for a house. Without it, everything built on top of it will fall apart. Good bookkeeping helps you prepare your tax returns, create financial reports, make business decisions, catch errors and missing transactions, understand whether your business is profitable, apply for business loans and financing. Before we go over the 7 steps, I just wanted to introduce myself. I'm Wade, a bookkeeping expert and a tax strategist. Now let's go over the 7 steps. Step number 1, separate business and personal expenses. Mixing the two can create a huge mess. Imagine going through hundreds of bank transactions trying to figure out which one was for business and which one was for personal. That's going to waste a lot of time and it's going to cost you to miss business expenses that could lower your tax bill. Also, depending on your business structure, you may be required to keep your business expenses and personal expenses separated. The easiest solution for this is to open a business bank account and use that account for business income, business bills, business supplies, advertising expense, software subscriptions, payment to vendors, and other business-related expenses. Avoid using a business account for personal expenses like vacation and groceries. You also want to open up a business credit card that is only used for business purchases. Now, just to recap, open up a business bank account, keep personal purchases out of the business account, use the business credit card for business expenses. Doing that is going to make bookkeeping and filing your taxes easier. Step 2, choose a bookkeeping system. The system is going to help you record and organize transactions. There are 3 options when it comes to this. Option 1, a spreadsheet, like Microsoft Excel or Google Sheets. Spreadsheets are usually inexpensive and easy to use. They may work well with really small businesses with only a few transactions. But spreadsheets can become difficult to manage as your business starts to grow. You may have to enter everything manually, and one small mistake in your formula and everything will be incorrect. Option 2 is accounting softwares, such as QuickBooks. I personally use QuickBooks because I think it's one of the best accounting softwares. Accounting softwares can connect directly to your business bank account and automatically bring in transactions. These softwares also help you with creating invoices and tracking unpaid bills, organize expenses, run financial reports, reconcile bank accounts, and reduce manual entries. The only downside to accounting softwares is that there's a learning curve, so it will take some time to learn. So you want to check out QuickBooks, click the link down in the description. Option 3, you can hire a bookkeeper. A bookkeeper can organize your financial reports, correct errors, reconcile your bank accounts, and provide financial reports. Hiring help will cost money, but it will help free up your time. Instead of spending hours on sorting transactions, you can focus on your customers and growing your business. If you need an expert bookkeeper, click the link down below to work with me and my team. Now let's do a quick recap. Spreadsheets are affordable, but they require manual work. Accounting softwares can automate many bookkeeping tasks. A professional bookkeeper can save you time and reduce mistakes. Step 3, choose a single entry or double entry bookkeeping. Single entry, record each transaction one time. For example, if a customer pays you $500, you may simply record the $500 as income. This system is easy to understand and may work for small, simple businesses. However, it does not always show the full financial picture. It could be harder to track assets, loans, credit card balances, money owed by customers, money owed to vendors, owner investment, and withdrawals. Now let's talk about double entry bookkeeping. It has 2 sides known as debit and credits. For example, when a customer pays you, your cash increase and your revenue increase. The transaction affects 2 different accounts. Double entry bookkeeping is more complete and accurate. It also makes it easier to create detailed financial statements. This is the method most established businesses use. The downside is it could be harder to understand or set up without a professional's help. Let's do a quick recap. Single entry records transactions one time. Double entry records the transactions twice. Double entry provides more accurate financial information. Most established businesses use double entry accounting. Step 4, cash or accrual accounting. Under cash method, income is recorded when the money is received. Expenses are recorded when the money is actually paid. For example, let's say you completed a job in March and your customer paid you in April. Under the cash method, you would record the income in April because that's when you received the money. The cash method is easier to follow and gives you a clear picture of money moving in and out of your account. This is why many small business owners uses it. Now let's talk about the accrual method. Under the accrual method, income is recorded when it's earned, even when the customer has not paid you yet. Expenses are recorded when they happen, even if you didn't pay the bill yet. Using the same example as before, the job completed in March will be recorded as March income, even if the customer paid you in April. The accrual method does a better job of matching income with the expenses connected to earning that income. This will give you more of an accurate picture of your business performance. However, accrual accounting is more complicated and usually require more bookkeeping knowledge. Let's do a quick recap. Cash accounting records money when it's received or paid. Accrual accounting records income when it's earned. Cash accounting is usually easier for small businesses. Step 5, 5, record every transaction. Once your system is ready, it's time to get to work. This means entering all income and expenses of your business into your spreadsheet or your accounting software. You can record transactions every day, once a week, every 2 weeks, or at least once a month. The more often you update your records, the easier the process will be. Waiting several months can create a large pile of work and make it harder to remember what each transaction was for. For each transaction, try to record the transaction date, the customer or vendor name, the amount, the description, the invoice or receipt number, and last, the payment method. For example, instead of writing 300 expenses, write something more detailed like $300 Facebook advertising expense for June. Clear description will save you time when reviewing your books or when preparing your tax return. Quick recap: record all business income and expenses, update your books regularly, add clear description of each transaction. Step 6, categorize your transactions. Recording a transaction is only part of the process. You also need to place it into the correct category. In bookkeeping, these categories are called accounts. For example, your account may include sales revenue, advertising, office supplies, rent, insurance, utilities, payroll, travel, meals, bank fees, and professional services. Your complete list of categories is called chart of accounts. A well-organized chart of accounts helps you understand where your money is coming from and where it's being spent. It also helps you create important financial reports, like your income statements, which allows you to see your revenue and expenses. It tells you whether your business made money or lost money over a period of time. Next, we have the balance sheet, which shows you assets, liabilities, and owner's equity. It gives you a clear picture of what the business owns, what it owes, and how much value is left for the owner. If transactions are placed into the wrong categories, these reports will be misleading. Quick recap: place every transaction into the correct account. Use clear and concise categories. Your categories make up your chart of accounts. Correct categories lead to better financial reports. Before we get to the last step, if you need bookkeeping services for your business, click the link down below for a free consultation. Also, if you need tax preparation services for your business or for yourself, click the link down below. My team and I can help you. Step 7, save your financial document. After recording and categorizing transactions, you need to keep your supporting document. These documents may include receipts, invoice, bank statements, credit card statements, contracts, loan documents, payroll records, tax forms, and proof of payment. Keep paper document in the filing cabinet, but digital storage is often easier. Scan or photograph each receipts to save them. You can save them on your computer, the cloud, or your accounting software. Be sure to create folders to keep things organized and label them by year, month, vendor, expense categories, and document type. Make sure you also back up your records. A computer can crash, a phone can be lost, and paper documents can be damaged. Keeping a backup protects your business if something happens to the original file. Just in case you get audited by the IRS, it'd be good if you could show proof. Quick recap: keep proof of every transaction. Store receipts and invoice in an organized system. It's better to save documents in digital copies because it's easier. Good records could help you during tax preparation or an audit. Now I have 2 bonus tips for you. Bookkeeping is not only recording what already happened, it should also help you prepare for future expenses. One of the biggest expenses that business owners forget about is taxes. Your business may owe federal taxes, state taxes, self-employment tax, payroll tax, sales tax, and local business taxes. The taxes that applies to your business is based on location, type of business, and legal structure. Do not wait until tax time to find out how much you owe. Set aside a portion of your income throughout the year for taxes. The rule of thumb is about 30% of profit. You may want to open up a separate business bank account so you can save the money there to pay your taxes. Each time your business receives income, transfer some of that money to that account. This could help you avoid spending money that you should have saved for taxes. Bonus tip number 2, reconcile your bank accounts. A bank reconciliation is the process of comparing your bank statement to your accounting software. The goal is to make sure the 2 of them match. If it's off, we have a problem and we have to fix it. Otherwise, we did not do bookkeeping. But doing the reconciliation, you may find missing transactions, duplicate entries, incorrect amount, bank fees, forgotten subscriptions, customer payments that was not recorded, checks that did not clear, possible unauthorized charges, or fraud. Try to reconcile your bank account every month. This keeps your books accurate and prevent mistakes. If you need bookkeeping services for your business from an expert, remember, click the first link down below to work with me and my team. Also, if you need tax preparation for your business, click the link down below in the description. Thank you for watching. Like and subscribe, and I'll see you guys in the next video.